Welcome to Channel Today in History. In today's video we will talk about the day, October 27, 1997. Asian Financial Crisis. The 1997 Asian financial crisis was a period of financial crisis that hit much of Southeast and East Asia from July 1997 and led to fears of a worldwide economic collapse due to financial contagion. The crisis began in Thailand on July 2, with the financial collapse of the Thai baht after the Thai government was forced to float the currency due to the lack of foreign currency to support its fixed exchange rate with the US dollar. Capital flight took place almost immediately, setting off an international chain reaction. At the time, Thailand had acquired a burden of foreign debt. As the crisis spread, most of Southeast Asia and Japan saw their currencies plummet, devalued stock markets and other asset prices, and a sharp rise in private debt. Indonesia, South Korea and Thailand were the countries most affected by the crisis. Hong Kong, Laos, Malaysia, and the Philippines were also affected by the recession. Brunei, China, Singapore, Taiwan and Vietnam were less affected, although all suffered a loss of demand and confidence across the region. Japan was also hit, but less significantly. External debt to GDP ratios rose from 100% to 167% in the four major economies of the Association of Southeast Asian Nations, ASEAN, in 1993 to 96, then skyrocketed beyond 180% during the worst time of the crisis. In South Korea, the proportions increased from 13% to 21%, and then to 40%, while the other newly industrialized countries fared much better. Only in Thailand and South Korea have debt service ratios for exports increased. While most Asian governments had seemingly sound fiscal policies, the International Monetary Fund, IMF, stepped in to initiate a $40 billion program to stabilize the currencies of South Korea, Thailand, and Indonesia, economies particularly affected by the crisis. Efforts to contain a global economic crisis have done little to stabilize Indonesia's domestic situation. After 30 years in power, Indonesia's President Suharto was forced to resign on May 21, 1998, following widespread turmoil that followed sharp price increases caused by a drastic devaluation of the rupee. The effects of the crisis lasted until 1998. In 1998, growth in the Philippines dropped to virtually zero. Only Singapore and Taiwan proved relatively insulated from the clash, but both suffered serious passing blows, the former due to their size and geographic location between Malaysia and Indonesia. In 1999, however, analysts saw signs that Asian economies were starting to recover. After the crisis, the region's economies worked towards financial stability and better financial supervision. By 1999, Asia had attracted nearly half of the total capital inflow to developing countries. Southeast Asian economies, in particular, have maintained high interest rates that are attractive to foreign investors looking for a high rate of return. As a result, the region's economies received a large influx of cash and experienced a dramatic rise in asset prices. At the same time, the regional economies of Thailand, Malaysia, Indonesia, Singapore, and South Korea experienced high growth rates, from 8% to 12% of GDP, in the late 1980s and early 1990s. This achievement was widely acclaimed by financial institutions, including the IMF and the World Bank, and became known as part of the Asian economic miracle. Did you like the video? In the description you will find the blog link with the full article. Give an incentive by subscribing to the channel, liking, commenting, and sharing with your friends. Hugs. Until the next.